Hello and welcome, and today is that of Crypto Day, the 20th day of March, first day of spring in the Northern Hemisphere, and everything you do within your own risk, own reward. My name is Derek, and let's get started. And it's not often lately that you can see some interesting possible bullish setups. Well, it's a bullish setup, but whether it be a possible move to come after that, well, that's what a bullish setup would be, as a more probable event. Okay, so we just look at the last few days in here. When the price came up here, I would have said when it was 950, 940, that it's a very difficult situation to buy within that point. However, when you are seeing possible setups like this, how this is going to work when you do buy in a spot where you've been in a downtrend, you see like a sideways consolidation range that preceded the green day up on March the 16th, or rather March 17th rather, that by buying in here, you're either going to be buying at the upper end or a higher end of a failed breakout, or relatively early on the reversal of trend. Stage 1, band flattening out, and it did so throughout this point here. Whether you count this as resistance established, if it did everything you were looking for in reversal of trend. And I do like, after how it went sideways for a few days on March the 9th, well, it did just that, went sideways. So now when I see this move and forth in place, here at 960, with this uptrend and a lot of this resistance, multiple tested, the more likely it is you test a key area, and in this case, the more likely it is you test a resistance level while maintaining a very bullish pattern on the low side or the lower ends of the retracements, then that creates a very, very bullish situation. Now, in the prior points, we go back to its last rally, there was that type of downtrend, there was the band flattening out, there was the establishing of resistance, a very big move to start this. So those who bought here at 650, obviously you can see, even though you were down as much as even 50% at some points, because that's the volatility of this game in a correctionary move, because it came back to the 18 average and started rising, resisting. Whenever you're resisting an 18 highs and supporting the lows, although it only supported the lows on a couple of occasions this day here and on this one big selling day or mode, and that was it. Then we've seen how it had a move getting above it, consolidating on the red and the decent sized green candle, which came up to this level of resistance, and then when it broke through after that, had one nice leg higher, retracement, one amazing leg higher, and that was of course it for that play. So now is it going to revert what was its correctionary move leg down, went sideways, and then really one more leg down, two legs lower for the most part? Well, we'll see. Let's just take a look at this on a shorter term time frame. I'm going to remove the drawing tools first, although let's just see how they look, because, well, I guess I nailed the lows okay, but what we could do is put a trend line in. I want to connect as many of those low points as I can within that last correctionary move. So there we have it. Now within this type of analysis, you come up to this point on 1600 hours, March 17th. And when you have this big rally, this type of selling, that's very normal. For you have all the people whom were just trying to get a profit. They were in this sideways range for quite some time, whether they bought at the upper end or lower end. Now they can finally read some profits. So they bought between 730 and probably 650, and they can sell it down to about 780. So they got a little bit of profits along the way. Plus, when this happens, there's not as many bid orders north of the resistance breaks, because they can only be ones that were placed within this case within a few hours of time. So everybody who bought on the 3 move down from this first high were those who put bid orders in at or after the start of this rally. So if you bought in here, you had to have put your order in within like 4, 5, 6, whatever hours ago to get it. And then as time goes on, and this is like with this in any market, as you develop and hold a key level, that means there's more time for all of these bids to fill in. And that's important to note, because if there's any big sellers that are looking at the market, they are most certainly going to be looking how many Bitcoins available to sell it down to a certain price. And as time goes on and the selling doesn't approach, well, you pretty much can realize that the bids have increased. And at the same point, what's also happening too, if you look at what the asks or the sell orders would be, say from 1,000 up to 1,200, back on, say, the end of the 15th day of March, back before it broke out, it would not have been as many of orders there than there would be now, because that's closer to price action. More people have had time to reflect on this kind of move and have decided how much they want to sell within those higher areas. This is something buyers are going to be looking at to see if they want to buy large. How little, basically, can they buy it up for what they want to buy? If they have a large amount of Bitcoin, if they have the option to buy it up, say, 8% or 25%, they're probably going to want to buy it up 8%. So those are the things that I also think of when I see long-standing markets of correctionary moves, that is part of the psychology in play. Now, as far as this time frame is concerned, again, we see this one move go down for the 3 candles. Let's reset the scale to make it look a little easier. That looks much nicer. So then you have a rally back to the previous key area where it came from. Now, last time it was there, it sold off pretty quickly. This time it didn't as much. There was a decent wave selling here. Was that just one person able to, like I state, well, now I can sell it from, say, 930 down to 858. We're back here. I would have been like 930 to like 790 or something, 770. So they realize they can get more Bitcoin for their sale. But regardless of the fact, after that came through, buyers came into the market as this trend line not formed at this point, but the bottom line was, I guess it could have been barely formed, but the bottom line is the higher lows come in, little bit of short-term resistance established between 926 up to 943. And then this breaks it just recently, this current session, with 1 hour and 11 minutes to go. So we're basically almost halfway through. Has had a retracement back down to the 18 highs, not quite down to this point, and is looking to go higher. But furthermore, you have point A, which is this low, to point high. And all the highs are around the same area, so I'm not going to change letters there. And then you go to low 1 to point high. Then you go to low 2, and you're back to point high. Because it's had a lot of time in possibly wanting to go higher or having its chances to go higher, you're in a situation where the mathematical setup is relatively strong for it to go higher. How much time do you have? Well, you got this trend line, but you know what? A small pierce in time breaking it is fine. As long as you have a significant low above the last one at around 850. So if it retraces down there, make a new trend line, so be it. As long as it keeps some sort of higher low bullish stage in process on the lower side, then the trend of a beautiful ascending triangle, however you want to name it, is still in place. But because it's had a pattern like this for quite some time on this time frame, and when you look at it, it's been 3 days. That's pretty decent in time. But you see price action noticeably above resistance. Then you know the chances of a major spark and big moves are in place. On the intermediate term time frame, the fact that you could be at early stages of a nice run higher where the bulls have their turn on the dice in this game of bulls versus bears. Therefore, we might be approaching 1 or 2 decent legs higher is another way of putting it. And of course, profitability within market trading. But the one thing I learned about trading firsthand, because I would look for these kinds of bullish setups and then just go in. So if I'm a rookie trader, or back when I was a rookie trader, and I was scanning through charts to find, come on, give me a good setup. This is what I was looking for. And I would be like, okay, I guess I'm buying this now. And what I realized, and of course, one thing I'd be looking for is buying in here as well. But the one thing that I realized was that when these setups didn't work, just like a failed move, fast move, when price action does something like that, and this of course being the failed breakdown, I realize the same thing is true when you have an amazing bullish setup. If it doesn't go down, well, if the action doesn't go down, it's going to go down in price. And the opposite's true. If you have an amazing bearish setup and the price doesn't retrace to what it's supposed to or go down to what it's supposed to, then you can expect large moves higher. But there's still a decent amount of time. The 18 average in this time frame here is at 900. That's like a 7-8% dip in price there. We also have this major level of short-term resistance at about 925 up to about probably 932. But as it stands, if you can wait to get to this point, this was the one thing I didn't like about trading, is because you have to be fast. It's just, I don't like doing it. I just like, as I state, buy low, sell high. As far as, let's move this back to the daily time frame. And reset the scale. Where I was buying when the price action, I bought in here somewhere. In fact, I can quickly take a look now, the day and the price that I got. And it was on February 27th. I bought some at 637. I bought some at 640. So on this date in here. So that was a decent buy. Now I sold some up here, but I wasn't able to buy back. Okay. Keyword is I sold some. My next sell order, I'm going to put the line in now for the approximate area. And it would be somewhere around here. The way I look at it mathematically is this was sale 1 here. This would be sale 2. Going from about 1,000 to 1,500, that's about a 50% gain. So I realize that if this top was about 27, I'm going to probably looking to sell again at around probably 1,900 and change, and then again at about maybe 2,050-ish. Then again at about 27.14. That would be 4 of my sell orders. Well more than half of what I bought would already be gone, because usually they're just going to come back down again anyway. I know when I look at the ones that, and we can see all the coming up and down within it. And this is just beautiful for executing those sell orders and buy orders that I talk about. Because in here, whatever you sold up to this point, you buy back easily in here. Okay, well, you sold up here at 338. No, maybe you didn't get that back. You could have, but you know, I don't want to buy at 330 or sell at 330, buy at 270, although it's profitable. On this point, I would have been like, oh, maybe I'll get this 330 buy or 330 sell bought back, and I'm going to wait to get it at 200. No. However, what you did buy in here because of what you sold back here, you can sell some here, buy it back, and there you go. This is some magnificent selling in here. Buy back, selling, buy back. And even though I like to buy below the 18 average of lows, when the market's not bearish and I'm able to sell well above the 18 average of highs, and I'm going to look to get back to correctionary phase, because if it holds on a bullish level, I'm going to be glad I bought. Possible chance to sell here, but possible chance to not. But let's face it, if you're at 585 and the price goes up to better than double, how do you not sell some? Seriously. Maybe in here you sold maybe 2 to 3 sessions, but maybe only one here. Okay, that's normal. What I sold here, you're buying back that day, the next day, and even if you bought back at 693 and you see it go down to 600, who cares? I don't care. And if you want to know who cares, then get a name tally, write the names down and just log them, because I don't care who those people are, or I have no interest in that list. So there we had it again. The move goes up, comes back down. So therefore, say you sold in, yes, let me just go back in here. Yeah, you sold this 340. You're unable to buy it back. Well, we can see here it came down to 225. So in time, it was able to place. So within this type of game, it's insane to expect different results when the same thing happens over and over again. So I'm expecting the same thing to happen over and over again. Lots of up and down moves, but throwing those moves aside and just looking at the direction of trend. Actually, let's do 3-day. I know this doesn't do justice because it can't handle the logarithmic view with the lower numbers, but what I can notice what it did do, this support last year, at the end of the year in October and November, was at about 260, even down to about 227, which looks like the exact resistance here and the area at which it came from. But whether it was here, whether it would have even been 150, or even if it would have been 428 or 460, as long as it can hold and stay above that key number, the technical analysis is playing what markets do. So therefore, you're getting a new floor, a new ceiling level. So then, therefore, since this point, the new long-term range going back to last May is support at 260-ish, resistance tested often at 2165, again at around 2300, and a max number earlier at 20. So in the 2000s has been resistance. So long-term speaking, it's going to have its up moves, but sometimes those up moves are going to be massive, as we've seen here. You will go from a high of 500, and then you go about 5x higher from that. If it does a 5x higher again, we're talking 12,000 Satoshi. And it's probably going to happen over a couple months or a month of time at least. They do go up fast, though. And then you're going to be expecting, okay, if this thing can go up to 12,500, 15,000-ish, and it's going to come back, where is it going to come back to? Well, I'd like to see it hold and stay above 1,000 to well, definitely 1,000 at the lowest, but somewhere around 2,000 to 25. And just think about that. You go up to 12 to 15,000 and you retrace back about 5x, 6x, who knows, and what it would happen to be to find that low. But that's what happened before, 2,300 down to 226. That's a 10x retracement. And it could 10x retrace it again, 12,000 to 1,200. 1,200 would be amazing support. Look at the resistance we have in that area. So understanding the volatility, very important. And I realize because of those nasty percentile retracements and moves to both the up and down side, by selling, as I talk about, when price action gets above the 18, and then mathematically, wherever the price handle that I sell at, look for a significant gain on top. If I sell, say I sell next at, say, 1,000, right, or well, even say 1160 as an example, then I'm going to want to sell again either at about 16 or buy back in this 18 average, maybe around 800 or 900 or something like that. and wait for the next play to come in, so that when you have those major moves up, it'll now be a challenge to see how much profit you can get and how much you have at the top. Did you sell out? Because if you could sell your last order at, like, say 2,600 back here, that was I mean, whether that was luck or not, or if it's just timing or variance, so be it. But that worked out well, because the profitability, if you sold, say 2,600, say you sold before that at 1,900, and so on and so forth. Now, whenever I see these kinds of moves looking to buy back, I want significant lower gains, and well, I would probably be buying back at 1,000. And then, of course, as it goes lower, I'd be buying again from the other sell order. So I'm going to finish the video at that. I'm just going to talk about this code. But there's a lot of good technical information regarding such. And man, I do like this pattern right now, especially with just this last completion hour. Anyway, thank you for tuning in, and have yourself a great day. Bye-bye.